We've got a good amount to cover in this video. We're going to shoot a little bit all over the place. But first, we're going to start with the more broad macro stuff and then trickle down into some specific things I kind of want to piece together and talk about from there. So in our last video, we talked about how rates were below 3%, and we didn't expect that to remain because the Fed is communicating very clearly they want rates to go up to 3% minimum and then look around and see if we need to raise rates beyond that. I don't really expect that's going to be the case. We're certainly seeing signs of inflation coming down. So I think 3% is going to be the level to watch, but I don't think we're going to stop before 3%. I think the Fed is getting there and just doing another 75. If they were considering stopping, if that was something that they were going to do, we will see a 50 basis point hike at the next meeting. If we don't see a 50 basis point hike, that means in the face of early signs of inflation rolling over, they're still going to 3%. And if they're still going to 3%, there's no reason, in my opinion, for the 10-year to be below 3%. And it broke 2.8%. Then on Friday, it got to 3.1, kind of chopped around 3.1, pulled right back to just below 3%. However, let's remind ourselves, below 2.8%. This is all this motion and this movement is happening in just a few days. Seems to be a very volatile treasury market. I don't, follow treasuries that closely. I don't buy them. I don't trade them or any of that. But as far as I'm concerned, that's a pretty volatile market. So, pull back below 3%. I'm not changing my thesis. This could be some sort of, pull back to a previous channel type situation one day. Let's let it go out. But I have the most amount of hedges I've ever had right now. I'm not a big time hedger. I tend to stick to fundamentals and buy stocks that I have a thesis around, not necessarily considering if the market itself is going to go up or down. But I have some broad market hedges right now, more so than I normally do, because I think this move above 3% is going to scare some people. I mean, we saw that last week. This kind of sell-off we're seeing now, towards the end of yesterday or Friday, we saw some not continuation of that. So we'll see what happens. But ARK is the title of this video. So despite all this negativity that I'm saying, rates above 3%, highest hedges I've had, I think the lows for ARK are in. Those lows are now almost 2 months old. ARK was basically in a just continuous downtrend. And then hit this 2-month slight uptrend, but we'll just call it flat, because I think it's going to end up being a flat thing. And it hasn't really done that when the market is going down. So the market hit a new low over a month after ARK's year-to-date low. So I think ARK and the S&P 500, there might be some level of correlation there. There obviously is. But I think the, new low channel, that type of correlation might be off the table for a little bit. And I think that, therefore, one thing that needs to be established is, okay, we think rates can't have a floor at 3%. They shouldn't be below 3%. Anytime they get below 3%, where they go. Shouldn't be below 3%. But where's the ceiling? Where is the ceiling? People might get freaked out when rates get above 3%, that, the Fed needs to tighten, we need to get positive real rates, which implies that with inflation at roughly 8%, the rates have to be above 8%. I don't think we need to go there. I think 3.5% is where the 10-year should be and will be. Why do I say that? Well, Mark Newton said it, very trustable technical analyst, kind of shifted my dynamic on saying, hey, wait, pullback might happen. I encourage you to watch some of his latest content. It's good content. 3.5%, that is the upper end. That is essentially the maximum of the neutral rate. That's the maximum of where the Fed wants to go before taking a look and seeing if inflation is getting under control. Now, the 10-year shouldn't necessarily be at the Fed funds rate, right? It should be slight premium above that. It's a longer term rate, et cetera, et cetera, et cetera. But maybe the Fed gets to 3%. That's the middle of the range, we'll call it. 3.5%, you got to factor in some risks. They're going to go there, and you got to give them the premium. So 3.5% is where I think the 10-year belongs. So once the 10-year gets up to 3.5%, I'm going to start buying. The market has had a historic decline. I think the lows for ARK are in. I think that dispersion between ARK and the S&P 500, the S&P 500 pretty violently hitting new lows and ARK not doing so. I'm not saying I like every stock in ARK. I'm not even going to buy ARK. Okay? Not going to buy Roku. Not a fan personally. Maybe I'm wrong about that. I'm not a fan personally. So I will be adding to my existing growth tech companies, and these real growth tech companies that are well thought out, first level type thinking companies, not necessarily Apple, Amazon, Google, Microsoft. I'm sure those companies will outperform the S&P 500, but when we talk about growth on this channel, we're not talking about mega cap tech. We're talking about real growth, 10x type growth. So that's where we'll be positioning. We have a lot of exposure there. We were red today, more so than the market. We might take a little bit of a hit the next couple weeks. We've got cash, we've got hedges. We're going to sell the hedges at some point. These are not long-term hedges. If you go on Twitter, you can actually see what they are. Not very long-term. We're going to get the answer. A lot of answers at the Fed meeting. We're going to probably sell some stuff around then. And we're going to reposition that cash. Seems like a pretty good short-term strategy in addition to our still heavily overweighted longer-term strategy. Even though I would have liked to do more buying at the true bottom. I didn't buy it on the bottom day. On the last one, I definitely seem to have a habit of going into options, longer-term options on these days. But it's what it is. We're going to see what happens. Anything can happen. I can be wrong. We will see what happens. Until next time, peace out.